In this video, we're going to be analyzing Mullen, ticker MULN. So to get straight into it, we've already got all the levels here color coded. So we're going to run through what we're looking at each of these levels. So firstly, Mullen though is down at 27 cents. We've just hit another all-time low, another 52-week low. We're down 15% on the day. Now, if you watched this channel before, you're already going to know we're short bias on the stock like this. Doesn't mean we want to be trading it short, doesn't mean we want to be entering shorts, but it means it's not something I want to be holding long bias. Again, we've been covering this stock probably for about 6 months now because people keep asking for this stock to be analyzed. We've said the same thing time and time again. Don't buy a stock like this because look at the longer term charts. What have happened? 6 month, 1 year charts, massive downtrends. What's more likely to happen? We're most likely going to continue on that same trend. What's the other thing to note? A 1 for 25 reverse stock split. Whenever you see a stock do a reverse stock split, it's never a good thing. And 9 times out of 10 when they do these reverse stock splits, nothing fundamentally about the company has changed. So all that happens is it continues to sell off until they either get delisted or they do another reverse split. So that's what you're going to see on Mullen. You're either going to see them do another reverse stock split or you're just going to see them get delisted. Again, time will tell which outcome we see. But it's just something I would never be touching long by. So to kind of get that out of the way, I just like to put that out there every time. So if you're bag holding, please just find a way to get out, or if you can, just cut your losses. It's not a stock you really want to be holding. Doesn't mean cut them at the all-time lows. You'll probably get some sort of a bounce, but it's just not ideal to be holding a company in it like this, expecting it to have long-term results when yes, there is definitely potential, but they're not a stock you need to be watching every day, watching these analysis. You just wait until it does it or you lose your money. But to get straight into the key levels. So we have these 4 levels here, going to cover these first because these aren't as key, but they're definitely levels to be paying attention to. So you got the $1 psychological level. So just want to point that out if we start coming up. Again, even from now, that's a massive, a few 100% increase to even get to a level like that where, we were at probably less than a month ago. And kind of just flew through it like it was nothing. But $1 key level, psychological level. If we did come here, definitely a key resistance. Then you got fair value at 113. So what this basically means from an investment standpoint, so if this was a company you were looking to invest, you want to be buying at or below that level. So obviously we're below that value now. So if we're looking at investing, it's at a relatively good value from that look. But again, have you done your due diligence on the stock? Is it something you actually want to be buying into? And then we have 2 other just kind of key resistances that have played out more recently. And that's going to be $1.61 and $1.22. So again, these are still requiring massive moves from where we are now. Don't even know if we will hit these, but I want to cover them because this stock, if it goes to the downside, I'm not touching at all. If it goes to the upside, looking to trade it short bias. And so that's what I kind of mean by this stock. If it continues down or it continues flat or maybe trends a tiny bit up, again, to me, not a stock I'm going to touch or even really look at. The only time I'm paying attention to is when it really comes to these key levels, and then, just have an alert out call. If it hits that level, I'll pay attention to the stock, look to trade a short bias, trade short bias if we hit those levels. Again, these are going to carry higher risks because they're really just previous support and resistances. That's about it. Where the big key trading opportunities comes are at these colored lines. So you got the second deviation, first deviation on the 1 year, first deviation on the 6 month. These are really high probability short levels. And again, from where we are now, absolutely miles off. And that's why we said, if we don't hit these levels, to me, I'm not trading. If we hit them, then that's where I will start paying attention to this stock, start trading at short bias. So we have the 430 resistance, we have the 570, the 750. Again, coming into any of these levels, really good high probability short bias locations, where if we can trade at short bias, again, that's what we look to do. On these, again, Mullen does have options. This is always a good thing because it can make the trading opportunity a lot easier, because what it means is we can trade it really 2 ways, or actually kind of 3 ways. We can either just buy outright puts at those levels, we can buy covered stock, and what this means is we short the shares and we buy the calls to define the risk. And that's one of my favorite strategies if we can get the shares available. This is hard to borrow, so depending on your broker, you might not be able to, but that's one of my favorite strategies because then you can kind of just let the trade play out. You could say buy 44-day out expirations, and it gives it basically 44 days for the stock to fall below. If it doesn't, you hit your defined risk, not the end of the world. And then the other way is just using credit or debit spreads, also known as vertical spreads, which again, you kind of pick a time in the future, and as long as it's below a certain value, you make your money. So that's what I like with Mullen. If it does squeeze, it's got options. It's an easy trading opportunity. Or not easy money, but an easy kind of way to execute. On a lot of these stocks, you don't have the options, you can't get the shares. So sometimes it can be hard to trade, but in this case should be all right. But again, one of those things, if you're a long bias on this, you're bag holding, you're looking to trade it to the moon, this channel is not for you. Again, we're looking at this more from a realistic standpoint. If it squeezes, we look to trade it short bias. If it goes to the downside, again, ignoring this stock. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.